Hello, everyone, and welcome to our virtual blockchain conference series, Reimagine 2021, brought to you by Mousebell. I'm your co-host, Ashlie Meredith, and today we're bringing you a very special 10th anniversary event. We have been doing this virtual conference series since May 2020, height of COVID lockdown while everyone was stuck at home, and we're just so grateful that we've been able to continue bringing you community and education virtually, and for the following we've built, and for everyone for tuning in. And today I'm excited to lead and help facilitate this Tellor panel where we're bringing in guests from all over the crypto space to talk about their experiences and kind of do a retrospective on how far we've come or haven't come. So I'm pleased to introduce some of our next guests. We've got Nick Fett, the CTO of Tellor. How are you doing today, Nick?
Hey, doing great. Thanks for having me.
Thanks for being here. Evan Kuo, founder of Ampleforth. How are you doing, Evan?
Great, Ashley. Great to be on here again. Thanks for inviting me.
Absolutely. And for anyone who's just tuning in, Evan is one of our repeat guests, a friend of the pod or the show, you might say. So definitely head on over to our YouTube channel, smash that subscribe button, check out some of his other interviews and our other Tellor panels that we've done in the past. We also have Robert Lauko, CEO of Liquity. Hey, Robert, how are you doing?
Hey, I'm doing well, and I'm excited to be on your show.
Yes, thanks for being here. And David Goldberg, core contributor at Synthetix. How are you doing, David?
Doing great. Thanks again for having me. Excited to jump into stuff.
Absolutely. And a big thank you to Tellor, our sponsor for this event, and for putting this panel together and getting some of these bright minds in the space and people who are working on really great projects. So to get started, Nick, why don't you tell us, we'll do like a retrospective of what the last year has been like in crypto, what the last 10 years have been like. I mean, it's not our 10th year anniversary, but we have done this event 10 times. So a little backwards looking, forwards looking. How did you get started in crypto?
Oh man, I'll try and keep it like relatively short. I always, I feel like everybody always asks you how you get into crypto. It's like such a weird question. But since we're doing the retrospective piece, I can jump into it. So I've been in crypto a while. I got in. I was big into the libertarian movement. Ron Paul 2012, if any of you were into US politics back then. But yeah, so it was, I got into Bitcoin pretty early, and then I ended up working at the CFTC, regulator for cryptocurrencies and derivatives. Was on the blockchain working group there, and then I left in 2017 to do a decentralized derivative startup. I got an Ethereum Foundation grant. That was kind of what got me kicked off, and during that, obviously, since everyone here builds like sort of derivative products, everyone obviously realizes that one of the key components to any derivative product is an oracle. And so this was like in 2017, we were working on the oracle problem, and especially in 2017, there was like really nothing as far as oracles go that was live. It was like really just you used a centralized one, or you were an oracle yourself, and that was it. So we started working on the oracle problem. We came up with a solution that we kind of liked, and that became and has evolved into Tellor. And that was kind of how we got started. So yeah, that's kind of the retrospective of how I got started. And then the other question was just like, what's it been like, whatever, the past year in the space. And yeah, I mean, the past year has just been wild. It's been awesome to see. I'm sure all these guys know too. Everything's completely changing as far as, just each of these bull markets. You get so many new people in, so many new companies. There's so much money floating around for people to start new companies. And even just being in for a while, like it's cool to see a lot of this stuff kind of finally coming to fruition. And, I'm sure maybe we'll talk about like the whole US regulation thing, but it's like, like as we're speaking, like literally like US senators are talking about DeFi products, which is, just you wouldn't have even been able to say anything like that, 5 years ago. Like I remember being, at a US regulatory agency, and like we were still learning what Bitcoin was. So it's really cool to see where it's come, and I'm excited to kind of be part of moving it forward. So.
Absolutely. It is always a funny question, like how did you get into crypto? And it's like somehow like it kind of finds us, especially if you're interested in things like libertarianism. And it's really common. A lot of the top people in the space who got into crypto, Charles Hoskinson, Eric Voorhees, that we've interviewed before, have talked about, working on the Ron Paul campaign, or getting interested in his ideas early on.
Well, I find it interesting. Like, I came from I grew up like evangelical Christian, and that was like, you would always get that question, like, when did you become a Christian? Like, it was sort of this, as if when you became a Christian had any sort of like reputation tied to it, and that's like, sometimes I feel like that's what you have now in the space, where it's this, like, what clout do you hold because of when you got in the space? But anyway,
is it the case of like the earlier you embrace Christianity, the more valuable your afterlife coin is worth?
Exactly. Yeah.
Can we just say that?
Well, and then same with like, people ask you like, when you get in crypto, as if they try and put like, oh, he must be loaded, and it's like, no, man, I sold all my Bitcoin in 2014. Like, what are you talking about? So sorry.
Definitely. And then just how much explosive growth we've seen only in the last year. We also interviewed the VP of markets over at blockchain.com for this series. So anyone just tuning in, and check out that interview as well on our YouTube channel. But they reported back in March that their user base tripled in the last year. So just massive growth over last year. It's really exciting to see. How about you, Robert? How did you get into crypto? What's it been like the last year?
Yeah, it's good that you mentioned that. Oftentimes it's like crypto that finds you, because in my case, it was quite literally true, because I grew up in Switzerland, in the canton of Zug, which then later became the crypto valley, so to say. And even though, I heard about Bitcoin, I think it was in 2013, I found it interesting, but then I didn't really delve too deep. But then a few years later, when Vitalik came to like my hometown, so to say, and founded Ethereum there, that was the moment when I really got stoked, and I got sucked into this whole new like ecosystem. And yeah, initially my kind of research focus, because back then I just like did it in my free time, not professionally. My research focus was on this kind of distinction, or this new concept of proof of stake. Back then, people were like saying, oh, proof of stake will never work because it's like nothing at stake. You have this vulnerability, and the rich get even richer. And you had like those initial like concerns. And then I also like chimed in the discussion. I wrote some blog posts and also like put out my own ideas. And that like brought me thanks to a chain of lucky coincidences, brought me to Dfinity, which back then was like very small. They didn't even have an office. And so I got into touch with like the 5 or 8 people there. And I basically landed my first job as a blockchain researcher with Dfinity in 2017. And after working there like 2.5 years on things like consensus algorithms and some game theory stuff, I just realized that I was also more and more interested in the whole DeFi space that was unfolding in the Ethereum ecosystem. And then in November 2019, that basically led me to like fully focus on my own thing, because I had ideas like how to make borrowing and stablecoins a bit more capital efficient than what was available, like MakerDAO. And yeah, that's how I basically started my own project Liquity in 1.5 years already ago.
Awesome. So you spent most of the time your company has been around in the last year during the pandemic. How has that been for you?
Yeah, that was a bit interesting, because I started, and then like 2 or 3 months later, I made it. Like, it was really lucky. I was lucky that I made it to Paris, like ECC in March 2020, because that's where I met some of the people there, and I could kind of already like get some important contacts and just like get really started. Because after that, everything just closed down, and it was really, our team is like scattered around the whole like globe, and I'm just the only one working from Switzerland. My like team members, they are like in the UK, the US, Vietnam, and other countries. So I mean, given this setup, I mean, it's already clear that we would just communicate over Zoom. So we didn't like really like suffer too much from that, but of course, I guess the whole like project would look differently if we had the chance to just meet physically and set up an office or whatever.
Yeah, we've been a remote first company since our inception. So it wasn't too much of a transition for me. I've been working at home for 3 years, but we did have an office in San Francisco. I miss being able to go into an office, but it seems like over the last year, the adage like crypto never sleeps, like it's not just the markets, it's the people working on this stuff. And because of those principles of decentralization and this collaboration that had already been happening for years all over the world, it's like nothing was going to stop people, and amazing things have been built over the last year. Yeah, thanks for sharing. How about you, David? How did you get started in crypto, and how has the last year been for you?
Yeah, so I got started in crypto. I started a smart contract auditing company, and that was back in end of 2017. So just before kind of the last bull run cycle. And then worked on audits for a while, had some interesting work. After a while, realized that launching a product was also interesting. So started working on some product related startup. And then, earlier this year, I joined Synthetix as a core contributor. So that was in January. So it's been an awesome year. I mean, just learning a ton about DeFi and being very deep on layer 2s and what we're doing on optimism. So that led to, some great, just knowledge buildup. And I think like my focus has always been on just like taking a long-term approach to the space. I think it's easy to get caught up in like the excitement of bull runs. And then obviously like if the bear market comes, like it's easy to kind of get a little either down or discouraged or whatever. But I think from what I've seen, it's like if you just think really long-term, like it's the early days of the space and it's extremely exciting. So yeah, that's how I got involved in the space.
Yeah, super exciting to be in a really pioneering industry. And finally, like only this year has anyone in my family finally asked me to like explain some of this to them. So I'm like, yay, people are finally interested in this, and my expertise is only becoming more and more valuable, so also encourage, students who are tuning in. We have a robust university program. We interact with students and startups from 100 universities in 24 countries. Adding this domain expertise to something that you're already passionate about, I think will only pay dividends. Like you said, it's early days, and get in early. It's still early.
And when did you join Synthetix, David?
January this year.
Yeah, because that's like no, I mean Synthetix is like one of my favorite like rebound stories of all times.
Oh, yeah, I've got a perspective. Oh, sorry, I didn't mean to interrupt you, but
I would love any perspective you have on that, because they were like, what were they, Haven before?
Yeah, Haven. Yep.
Haven, and then they like went to nothing.
Exactly. So yeah, so basically, Haven was one of our audit customers.
Yeah.
And so back in 2018, like early to spring of 2018, we had audited Haven, and we really liked the team. And so so basically they had this system where they found that they could use some underlying token, which was called the HAV, which is now, it's basically rebranded as SNX, to allow people to mint a stable coin, right? And then use that stable coin to like do things. And their vision was just kind of like, okay, we see that there's now a bunch of stable coins, where can we kind of extend this model? And so I think the insight they had was that they were kind of the first protocol to realize you could then use the same mechanism to create like any synthetic asset, which is basically then they rebranded to Synthetix. And it's a great example of like continuing to build during the bear market, right? Because 2018, we all got hit pretty hard with the bear market. I think for me, it showed me if you really believe in a team who's going to just keep building and really believes in what they're doing, that's usually a good like strategy even regardless of market conditions, I guess. And so, then that sort of blew up into Synthetix with derivatives trading. And, one of the other really important, for those who don't know, like Synthetix is a derivatives trading platform. So basically they have this mechanism that used to be like exactly or similar to what Haven had done to create like NUSD, which is called Namens USD. But they applied that same mechanism to be able to create any synthetic asset, and then traders can come on and do leverage trading on chain. So, for example, right now we've integrated with Optimism on layer 2, and we're going to be releasing like futures trading at some point. And so traders will be able to come on, take out leveraged positions against, trades, whether long or short. And that's all happening, via Ethereum, which is pretty exciting. And, it's pretty powerful to be able to get on L2s. Because
you guys were like one of the first people, though. I mean, like, what was the inflation rate on the coin during the rebrand there?
Oh, that's a good question.
They just they just decided to print. We're like, the coin's worthless basically, so we're just going to print out the wazoo and basically give it to stakers. It was like the first yield farming kind of example, or not the first, but like yield farming sort of followed after that in a very similar vein, I would say.
Yeah, I'm not exactly sure, like sort of the decision making around some of that stuff, but I do think it was pretty interesting because at first they had no inflationary element to their token, and then they introduced that. And I think one of the things that we've continued to see is that one of the best ways to build community is through incentives and like things like that. And so when you kind of introduce this sort of inflationary element, it gives you a lot of, as a protocol, flexibility to then roll things out that really help build engagement in the community over time. And obviously there's the right balance of like how much inflation, and that's like a difficult token economics decision to be weighing. The other thing that's really impressed me about Synthetix, then maybe don't want to take up like obviously the whole time here or anything, so is just their move. They're really, I think, one of the pioneers of moving to a decentralized governance, like making that a huge priority. And so one of the things there that was really has been exciting to see is we've got this council. It's called the Spartan Council. There's elections every 3 months where the token holders vote. And there's a lot of, trade-offs that like you have to consider. Like people think like, oh, it's really hard to build like a token economics model, which is true. It's also very hard to build like a decentralized governance model that like works and is like,
I think all of us are trying.
I think that's harder.
Yeah, exactly. Yeah. It's like a whole science, and there's a whole, you encounter all these edge cases you didn't even think about. Right. So.
Yeah, token economics is easy. The people price adjusts.
And governance is also easy if you just do away with it.
Yeah, true. Rules-based governance and fixed supply. There you go.
Yeah, Kane, the founder of Synthetix, has a pretty interesting. He gave a talk at ECC in Paris, like a couple weeks ago. So you could always, I think it's online. You could check that out. But basically, the big problem that we kind of encountered was like, how do you move from a system of control, which is like how most companies have operated in historically, to a system of coordination, right? Where it's not really control, but then the community as a whole are making good decisions for the community using really effective coordination mechanisms. And so it's obviously very challenging. I think one of the things that Synthetix learned was at first they had basically user or like token holders would just vote on proposals directly, and they would just cast their vote, and then it would either pass or not pass. I think the thing they found was that sometimes it's hard you get people voting who aren't informed, right? Because maybe they just don't pay attention and they're just like, oh, whatever, here's my vote. And you also might get people in the community who maybe aren't engaged, right? And those are two of the big challenges with like the direct voting model that Synthetix experienced. So then
this is democracy problems 101.
Exactly, right. So then they came up with the idea of what if we had like a smaller amount of people, maybe like 8 or so people who are super engaged with the protocol, very deep, very informed on what's going on. So the decision making could be really, good. And those people are elected by the token holders to serve, epochs, which last for 3 months. And then if they don't do a good job, obviously, won't get reelected. As long as you're doing a good job, community is deciding who's to vote. There's other considerations, like how do you avoid whales from controlling who gets on the council? So we've had there's an interesting kind of thing there, which is like, so we only allow each address to make one vote That way you can't elect all 8 people. Like if you're a whale, you can't say, I'm going to split up my holdings and vote for 8 people and basically put everyone on the council. You can only vote for one person. Now, you could like potentially Sybil attack it, where you spread your whale holdings to many different addresses and then vote for different people.
That sounds pretty straightforward.
Yeah.
But the way Synthetix works is every week you have to claim your SNX when you're staking. And so because of that, if you did that, spread it out to a bunch of different places, it'd be very expensive every week in gas costs. And so people haven't done that.
Yeah, I mean,
That's really interesting, because I mean, I mentioned like this debate when I joined like the whole like blockchain space between proof of stake and proof of work. And one of my ideas back then was something very similar to what you just mentioned. Like I called it proof of membership, where you have like kind of an incentive not to split up your stake. Like it's kind of like a Sybil protection, because like the number of accounts that you can hold is kind of limited. You just auction them off to the highest bidder, and then you can get some yield or whatever like with your account, but you don't really have an incentive to own more than one account, because you have to pay for the account and you get the same benefit with one account. So it doesn't make sense to own more. So, I mean, that was kind of a very similar like approach then to yours.
Cool. Move on to Evan, get him out of the way, and then we'll...
You guys, this is going to be kind of awkward, but there's some strange construction going on, and so there's definitely a chance that like an unbearably loud noise is going to kick in for me. So just FYI. Anyways, I guess real quick, since I've been on the show already, feel free to check out my background story there. I did want to kind of throw out something that, just kind of quick remarks on what has changed and what I've observed in this past year, and like many of you guys, like the rise of governance for sure, right? Like a year ago, decentralized governance wasn't like that big a deal. This year, we've already pushed 2 proposals forward, and Aave, we've launched our own governance token. We're kind of working with some of these kind of coordination problems. It used to be the case that, we just wanted to keep things as simple as possible to avoid governance, but, at some point you just need to do a little bit more. And then I think just zooming out a little bit, thinking about how things have evolved, I've actually started to kind of write my thoughts down in an essay on this, but it's kind of a crypto theory of everything. And I am trying to make the case that pretty much everything that's unfolded in the market thus far could be described as kind of the tension between digital cash and digital gold, where digital cash is what was promised in the Nakamoto white paper back at a time when nobody could think that gold was cool, at least not millennials, right? It sounded like inflation, gold sounded very kind of old. It sounded like the vestige of a flawed past, not the future that ought to be. And we couldn't get excited about gold, and so we couldn't get excited about digital gold. But then they said digital cash, right? And that all of a sudden started to make sense, where it's like, okay, imagine the internet's this borderless country. Shouldn't there be a borderless currency with which we can spend money? Sure. Suddenly that made a lot of sense to me. And so for a lot of time here, I guess, like, as I've been thinking about crypto over the years, I have been just really unpacking the tension between cash and gold. And I think that like the number of people who can appreciate cash is just fundamentally a lot bigger than the number of people who can appreciate gold. So calling Bitcoin a digital cash is kind of an unequivocal marketing win. You can reach many, many more people. Everybody can nod along. Not everybody understands gold. Not everybody wants to. But the fact of the matter is it's much more like a gold, right? And we use cash and gold for very, very different things, right? When you say cash, like, what is cash? It's money in the form of paper notes and coins, but like, what's a digital cash? Who knows, right? And so I think people just encoded the phrase digital cash in their minds into digital dollar minus the bank. And that carried all these kind of associated expectations like, oh, I ought to be able to use this to pay for coffee one day, or save for rainy days, or lend or borrow, subscribe to services and utilities using this money, use it as collateral for something, right? Denominate salary and wages for something. We don't use gold for any of this, right? But what was actually delivered was kind of this gold. It's a fixed supply kind of commodity-like money. And what are the use cases of that? It's like checking inflation, checking boom bust cycles, speculation, portfolio construction, all things that we don't use cash for at all. And I think, even if people were sold on this cash and they bought this gold, they ended up kind of getting rich off of it if they held on long enough. And so they developed this like new appreciation for like, scarce assets. And so the battlefront between cash and gold always took place in the next cohort of users, the people who had not, the pre-coiners who had yet to join the revolution, so to speak. And they were always
yet to make money off of it.
Right. Well, I mean, it's like, it's just harder to explain. It's like, early days Bitcoin, it's a speculative asset and it goes up with more and more demand, but it's easier to come by that demand by telling people it's like a magic internet money. It's like a digital cash. It was always easier to tell that story, I think.
But I mean, I would argue,
gold.
I would like push back even on the digital gold. Like I would say like even normal gold. Is normal gold any of those things? Like as far as an
that's what I'm saying.
Hedge?
Yeah.
Like, no.
Well, I mean, some people use it that way, right? It's certainly not used for denominating like loans, right? Or like denominating wages and stuff like that. That's out of the question. But what I was saying is like, because we promised this thing, delivered this other thing, there's a natural demand vacuum for anybody who can provide more, who can point to Bitcoin and say like, look, this will never scale to cash. It's got this transaction volume problem, right? Or this will never scale to cash. It's got this volatility problem. Or this will never, scale to cash. Like cash, as we know today, is more of a system of banking and accounting, right? This doesn't have the infrastructure for that, right? And so anybody who pointed at these problems and said like, well, we can make it more like this thing that it was originally promised to be, could get some attention for better or worse. And I think that led to just a number of variants. The first variant being the Bitcoin standard story, right? Which was like, okay, well, we get that this is more like a gold than a cash, but there was once a gold standard. We issued cash on top of that, and therefore there could be this like Bitcoin standard and issue cash upon that. And all of a sudden, everybody's like, yeah, that's how we get back to what was promised, right? Another variant would be like stablecoins, obviously, right? The decentralized stablecoins. Like, oh, if we have the decentralized stablecoin, then we have the cash. We can build the entire banking system. We can use that as a collateral asset to issue derivatives and recreate all of traditional finance without any reliance on kind of a centralized authority, a non-permissioned cash, right? And another variant of that, even I would say, is like Ethereum, where it's like, hey, look, Bitcoin just doesn't do enough, right? Like it's a simple system. It does what it does very well, but we need something more general, right? Imagine a generalized computer for articulating these contracts. We could use that to create basic banks and far more, right? And then you just get to this point where the reality does battle, like the convenient truth or the convenient lie does battle with the inconvenient truth. Right. Whereas like when people actually, try to use Bitcoin, for purposes that are more cash like they try to buy pizza with it, right? Or they try to like, I don't know, do something kind of silly with it that, leads to kind of profound losses. And that's what kind of sparks the next kind of generation of ideas again and again and again. And we see, I kind of see some of the malinvestment cycles taking place, like with all these stable coins, these decentralized stable coins, which have subsequently collapsed for like provable reasons before launch. They're kind of capitalizing on the promise of a digital cash. But at the same time, I'm finally getting to the point where I see a way out where, through the right type of work on these underlying collateral assets, we might actually be able to deliver
but
what was promised.
I would like push back. I mean, how much of this is, like whether it's you talking, we go to the Bitcoin standard and moving towards, we can actually create banks, and, David talking about Synthetix discovering delegates, like how much of this is us sort of just rebuilding from the ground up what's already built? Because if you have to go back to the gold standard, for instance, and call it the Bitcoin standard, like, aren't we going to just hit the same problems? And aren't we going to just like, if we get to, like you're seeing that with the regulation?
So I guess I wouldn't call that pushing back so much as agreeing with me in a way where I think a lot of these variants are false promises, right? That either go nowhere or cannot be delivered. And these false promises can capture a lot of market demand because they're telling people what they want to hear. Now, I do think it still continues to kind of, spur innovation. And now I'm starting to think that it's actually getting us a little bit closer. I think that if we can simply recreate the traditional system without reliance, right, in kind of a permissionless way, then we've gotten somewhere. If we end up recreating the entire, traditional system except for digitized, right, we have, say we have like a representative democracy and a central bank digital currencies, and we're just taking everything that was already done right? And creating the mirror image of that with legal enforcement on ledgers. I don't really think we've gotten that far, right? But I think if an alternative financial ecosystem can be created that is not reliant, that is politically independent and functional, then I think we've created a little bit of optionality and gotten somewhere.
And I think this is really interesting. I think it's not only about like coming up with like crazy innovative things that have like no predecessor in the traditional finance, but just making sure that some of the institutions that we already have just work the way they should work, like become more transparent and more efficient, and also be more open to like a broader public. I think even with like reaching those goals would be like a big step or big leap forward.
I agree.
And then we haven't even like talked about like the really innovative things that nobody has really thought of before. But I guess like we still have like enough like concrete issues to solve, like of the traditional finance, so that yeah, I mean there's plenty of stuff you can do. I mean, just the fact that trading venues are not open during like a weekend, for example. I mean, you cannot trade stocks on a weekend. I mean, why? I mean, once you've tokenized,
I think I would push back on you and say, like, I think that there's a great deal of innovation taking place, right? And a lot of this kind of Cambrian explosion of ideas is because folks are operating in a kind of regulatory gray area, right? So I think that eventually, if you think about blockchain technology, a big kind of the part of the value proposition there is kind of centralized, or basically censorship resistance as a function of decentralization. And there's like a marginal utility to kind of wanting to use a system that's not quite as kind of efficient as a centralized system. And I think that marginal utility will come at a trade-off against like the need for censorship resistance. So where there was previously no opportunity to compete whatsoever, like monetary assets, like you couldn't really just kind of issue and create them. That sort of platform is a hugely enabling platform, because you go from like not being able to compete at all to suddenly having a horse in the race, right? And the same could be said for some of the more innovative stuff that we're seeing today, where like they seem to be like minor optimizations on top of traditional finance. But if you had to go through the normal regulatory hoops, I don't think you would have gotten away with creating like a compound in the kind of period of time that they did, right? And all the kind of fancy things that we see from it, or even like a Uniswap, right? You would typically require a great deal of licensing, or certainly with like a derivatives exchange, I would imagine you have to go through a lot of kind of burdensome regulatory hurdles to even kind of start to experiment with things. So I think even a lot of this transparency and innovation is kind of taking place because of kind of the permissionless nature of these decentralized blockchains. So I guess it's a long way of saying, like, I think there is going to be a lot that can be done on these chains, but I think the things that really succeed will take advantage of the core proposition of the underlying change, which has something to do with being kind of censorship resistant, and also the ability to articulate scarcity in a purely digital context. And so I think, you know, monetary assets and banking services are a very natural fit. Even NFTs, I would say, like you've been able to create scarcity in a digital context. And there's a precedent for thinking about works of art as kind of monetary instruments as well. So it's not like something I would point to as evidence to suggest that everything will one day run on a blockchain moving forward, just as I don't really believe in the thin client kind of ideology of cloud computing either.
Yeah, well, I mean, I think it also comes down to, you know, whenever you guys are talking, like, I would say, like, there's like two different ends here, like, as far as like there's the Synthetix, more community based, and then like Liquity, where a piece of code on the blockchain running, and you guys probably have very similar views on it. But, you know, there's like the innovation of you can be censorship resistant code versus, you know, we can be a community and actually not be a community that's based on normal laws and like sort of redo the whole law thing. Because, you know, like whenever you think about like what are the big gripes with our current financial system, you know, there is like the whole, you know, they're printing money and we don't agree with it, but it's more so like the community aspect of like, I don't feel like I'm part of, like, appreciated as part of the community. You know, they're, you know, bailing out the big banks but not the little guy. And you can fix that with crypto, is, you know, making these DAOs and making these, you know, almost adding more of the human element into it. So
You can, but we don't know that kind of these governance systems are going to end up being more efficient than like the direct or the representative democracies that we have right now. And like right now we have like a very good way of verifying like identity in the centralized world. Whereas like we have to rely on things like game theory, for example, to prevent somebody from Sybil attacking and just literally buying.
But I think that's the difference though. Like, you know, like I think that's, you know, there's like two things. Like you can either make things really, really hyper efficient. There's like that hyper efficiency push in blockchain. And then there's also the things that aren't making things hyper efficient. Like Bitcoin, for instance, is not making things more efficient in any way. It's
Correct.
Like really, you know, but it serves its purpose.
Yeah, it's a rules-based kind of currency, which stands in opposition to a discretionary currency, right? And so I think that's another thing that when you point at gold and you're like, there's something, we need to make a better gold. Gold was never tasked with being a caretaker of the people. If you point at cash or like, you know, the US dollar, for example, and say we need to make a better dollar. Well, I mean, like the Fed has a very clear mandate. It is a caretaker of the people, right? It has to kind of look at price inflation and interest rates and employment rates. And so to complain about the dollar is to actually rage against government. To complain about gold is actually not about raging at government whatsoever. And so when you start to kind of confuse those two things, then kind of the prerogative of blockchain as a solution to all government problems starts to emerge, and there's an opportunity to capitalize on demand by promising, you know, that the little guy will be better off, right? That these other people can stop making, I mean, you know, name your conspiracy theory becomes a valid way of gaining traction.
Yeah, I wanted to respond to one thing you said because Nick brought up in the beginning, and as we're wrapping this up, maybe we can talk about some current events with regulation in the US, the infrastructure bill yesterday, which is that regulation stifles innovation. But I also think that there's a lot of innovation that isn't happening because we're in regulatory gray area and entrepreneurs don't have the confidence to move forward with ideas and not worry about having to spend millions of dollars in legal fees to get an opinion from a lawyer. That's just, I don't know, you might not get sued. So I think it can go a little bit both ways. And I think that regulation doesn't necessarily have to be all bad, but maybe since it's a current event, we can have a couple of your thoughts on some of the things going on around regulations in the US or elsewhere. Nick, you brought it up, so maybe you have some thoughts. Or you want to respond, Evan, first to my point?
No, I think I've talked enough. I think we should have Nick go.
Sure. I mean, yeah, like on the regulation, like we just, we've been asking for regulatory clarity. We obviously didn't want it. I think some of the bigger issues just come in like, you know, don't worry about it. We've likely been pretty illegal in gray area now for quite some time. You know, add another registration requirement to some of these things that should have had registration requirements from the beginning. It's not that big of a deal. You know, eventually they're gonna come after us, but I'm trying to look at it on the bright side. You know, it's gonna make some protocols better. Like there's been a lot of really bad centralization and pretend protocols out there. Like I wish there was like, you know, part of me, you know, the selfish part of me wishes there was somebody with a big ruler that was slapping all of these protocols who pretended to be decentralized and were just, you know, completely centralized shitcoins. So it would be nice, like if you could just weed those out and the regulators would go take them out for us. But at the same time, like, yeah, like it's,
I mean, that's what they claim they're doing, right? It's like protecting consumers, but
yeah, I mean, but there's been a lot of bad stuff in the space. So, you know, we'll see how it gets enforced. You know, a lot of people, like, so I worked at a regulatory agency, and so what's going to happen, like, let's say this passes, and then they're going to have to push it to a regulatory agency to actually get it enforced. So, like, if you remember, like Dodd-Frank, when it passed after the last financial crisis, that got pushed to the CFTC and the SEC, and they're like, hey, like, we don't have resources to enforce this. We need more resources. Then they got more resources, and then, you know, 2 or 3 years later, they figured out how to actually enforce it, and they clarified what all of this stuff actually meant, and there were court cases after court cases, and then 5-6 years later, it started getting enforced. So we're not really in a rush. So.
But speaking of like consumer protection, I think there's one important question there, which is kind of like, I see like that some regulators are maybe a bit misguided in thinking that we need to protect the consumers against like basically the entities that are providing a financial service or providing or controlling some financial institution. Because with blockchain, at least, it's not so much about control, because at least if you're really trying to be decentralized, it's then about a whole network that is running a software that is kind of trying to achieve some goals, or even through game theoretic means or whatever. So I think rather than trying to make the developer responsible for all the actions that normally a centralized entity would be responsible for, you should try to set the responsibilities in a way that's more appropriate to the whole software. I mean, if you have defects, I mean, if you don't do your audits, if you just put out something crappy, I mean, I can see that a regulator would want to hold you responsible for that, but it shouldn't be about about the control that you don't have, because the whole point of your software is to give up control. So I think
but I mean, regulators don't do things that make sense. And then, I mean, that's one of my biggest fears actually, is that what's going to happen is let's say we are successful, we start, the DeFi fund, and we start lobbying Congress and get really good at it. That's probably a worse outcome for the space in the long run.
Yeah.
If we all are all friends with regulators in Congress, that's not the outcome we want for sure. So anyway, David, any thoughts? You've been quiet.
Yeah, just I mean, I think the exciting part about that I think more and more people are realizing in crypto is that things that were reserved for just a few people previously, right, are being opened up, and that's kind of a blanket obvious statement. And I think as far as governance goes, that's really interesting, because if you just think about who politicians profit off of being politicians, right? There's a certain element that then I don't know, it's become so there's so much selfish kind of behavior in terms of politics that it's interesting to think about how do you do politics where you kind of preserve and when I say politics, I used as an example, you get elected onto a council that's a governance council, right? How do you actually avoid going down this path of a similar situation where people are acting selfishly for their own incentives based on lobby groups paying them, or things like that, which is pretty interesting. So I think that's one thing that's interesting, but it does give people now a chance to also I think the other inflection that I've been seeing a lot is sort of the creator or the freelancer economy kind of working its way into crypto. So we have a grants DAO, right, that's giving out grants for things, right? We've actually had several people we've hired from the grants DAO who came on as full-time core contributors. You have people who are starting to make a living on those types of things, which is pretty interesting. And then you have people who get elected onto these councils who are also earning stipends to be on the council to ensure that the incentives are aligned and that they want to do a good job to get reelected because they're getting paid to be there, right? And so it's interesting to me to think about this kind of new world where prior to crypto, there's no way I could have gotten paid to be on a council that makes decisions for some community, right? So that's very interesting to me. And then even what we've been seeing with NFTs around artists, right? In the past, it was always very difficult for artists because they, all these different companies take stuff off the top from them, and it's just so hard to be profitable. But now it's opening it up so that artists are a little bit more empowered and have more control over the distribution of their art and their monetization. And then I guess the same thing in terms of providing liquidity places, right? So you have I could go on Uniswap, I could provide liquidity for small amount of money, whereas before it was kind of reserved for the Wall Streets and everyone. So I think just all these things kind of combined is really interesting. And I still think not enough people are aware of this sort of democratization of things that's coming. So
I think that it's really important to kind of baby step into it and try to limit the scope of a decentralized governance to the extent possible. I mean, one example of this would be imagine you're decentralizing control over your car, right? You could decentralize control over the steering wheel, right? And have folks on crypto Twitter steering you left and right as you kind of sit in this car. Or you could decentralize how tight the gas cap is after you fill up the tank each time, right? One is has the potential to be, you know, a huge disaster, and the other is kind of, you know, limited. And so, I mean, I think constrained discretion is a good way to move forward. I do think that like one interesting paper that people should check out if they haven't is Rules Rather Than Discretion, the Inconsistency of Optimal Plans by Kidlin and Prescott. So this is a Nobel kind of winning paper, and it's not even that old, but a lot of people kind of use optimum control theory as a way of modeling out these systems. And what's interesting to see here is that that will never be optimal. So that's what they're able to prove, because the game is actually a game against like rational economic actors, it's not really a control system if there's an actual social agenda. So I wouldn't say that Bitcoin has an actual social agenda so much as it's just preserving this one scarcity profile. But if there's like a social agenda, like eliminate wealth inequality or create more jobs or anything a little bit more fancy than that, then these discretionary systems, man, they get complicated so fast. And I just think that the huge opportunity here is to kind of build up some rules-based systems, and then we can layer discretion on top of that. But we can shore up the foundation a bit, I think.
Absolutely. Well, great chat on where y'all got started in crypto, regulation, some of the exciting things that your projects are working on. And I think what came out from this conversation, you know, where we're going or what's been the most exciting thing in the last year, DeFi, governance, NFTs, these new ways of organizing ourselves, of creating and receiving value is all really exciting. So thank you all so much. Thank you, Nick, for inviting everyone, and Tellor for sponsoring. And yeah, thank you all for joining. Evan, David, Robert, Nick. And for anyone just tuning in, this has been a Tellor sponsored panel for Reimagine 2021. Stay tuned for more.